So hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Hope everybody's having a great day wherever you are, whatever you may be doing. 50 pips, rocking and rolling. No trade calls, no recommendations. Everybody's responsible for their own stuff. We're here for educational purposes only. Sessions are recorded. You're going to get a recording as soon as it's over. As long as you do it for your own personal use only, nobody will be blocked, nobody will be banned. We'll all behave as one big happy family. So what up, what's going on, guys? Any comments, any questions? Shoot, anything anybody wants to look at, shoot. If not, let's get cracking, let's get rocking, let's get a rolling. Quite a few things to discuss today and a lot of interesting action across the board, okay? So where to start from? Well, let's look at some of the Forex trades, right? So basically, Euro GBP still back to the opposite side of the range. As we said, we would have been long for the hold of those lows. So here really, if you're in that trade for the range, you're flat. Does that make sense? You'd be flat on this trade. Now, if you're looking at it from a bigger picture, right? Remember, whether you're looking at a 4-hour or a daily, we first started looking at this, right, on this whole basing, right? Remember, this was our first long back into this zone, and then here there are opportunities to try and get back long, okay? Now, what is this? This is still a range, but the way this is trading, what you want to look at is for any kind of move like this is to break out higher. Does that make sense? It's an important point, and what you want to look at is basically, right, that this is a continuation play, right? Does that make sense? It is just a continuation play, and you know, we'll have to see if it gets traction or not, but it's a continuation play. Now, you could also be looking for a move back down. What you'd need to see is a close back inside this range, right? So either from a 4-hour or from a daily. Here, why do we say it looks like it's trying to break higher? Because you see that on the dips, you see these wicks. These are indicating that the buyers are still there, right? So a negative close back here would be a move back to the opposite side of the range. But here we would prefer that this is basically, we would expect this to try and, even if it comes back down, to hold and ultimately to break up higher, right? That's what we'd be looking at. And again, the upside targets would be, you know, back into the, shout out to Marty, 90, 91 zone. That's what we would be looking for. Okay, so this trade is slowly but surely trying to play out. EJ, this is also trying to play out. Remember what we said yesterday? We would move our stop, not keep it wide. So that stop is still in play. This trade is also for a move back higher. So it's also in play, no change. Still would hold the stop there. It's going to be a key day. CAD swing long still in play. We have to, a little bit tricky here. Actually, today you got short trigger, short, stop above the highs, TP1 for stop. It's done. This is looking for a move back to the opposite side of the range, right? But right now, not a lot to do, but the swing long is still in play. That's just a counter trend move inside that current area. We got the RBNZ talking about negative rates, bam, smack down overnight. Let's see if you get follow through there. Remember here you've got both the Aussie and the Kiwi. Basically, the big question is, are these sell signals on the daily going to hold, or do we still have to grind higher and fail from higher levels? Likely the equities are going to be extremely clear clues on how this is likely going to play out, right? Cable still heavy below that 124, no change. Euro still holding that 128. We're still looking for the pain trade to be for a squeeze higher. Hey, how's it going? Yen, our base case is coming back down, unwinding this move at the very least. And we said you didn't need to hold the wide stop, you could hold a tighter stop. Okay. Now here, if you want to tighten up the stop, remember yesterday we said don't panic on the yen. It's still in play, right? Don't panic on the yen. So here you see we're starting to see a little bit of this tighter move. And the big question, is it going to hold this? Now, some people will like to put on something like a shorter moving average on here. I have no idea. Let's try and eyeball this. Let's see if we can eyeball this 20. Oh, look at that. So there you go. So you see, again, 20, again, the usual ones are like 20, 50, 100, 200. So you see how it looks like the selling is coming in. Strong selling, right? Probably get a better one, but you see how it's holding. So here, really, unless you get a 1 hour close above, you're likely good for the trail. You see what I mean? Hands up if this makes sense. Okay, now the question is, which moving average should you use, right? Should you use the 20, right? Should you use a 19? Looks like it's holding. Should you use a 10? Should you use a 20? But exponential, right? Who knows, right? That's why instead of using the moving average, what I prefer to look at is to look at something static that is always the same. So what would that static be? That would be looking at the previous day range, okay? So you see that the tightest I would trail, imagine we don't have a moving average here. Does it make sense to everybody that the tightest I would say I would trail is above previous day lows? Because this is an important point, right? Does everybody, I hope that doesn't shock anybody. Just give me hands up that it makes sense. This is the tightest I would trail, right? And the widest I would trail, wider trail would be above previous day mid, right? So you see here that even if I didn't have the moving average, the tight trail is in line with a shorter moving average that the market is respecting, right? But what it does by looking at something static is that I don't always have to try and find whatever moving average is being respected, right? I just focus on the previous day's structure, okay? So in this case, what I would say is at this point, I would trail. You could also look at something which is, if we bounce, extend previous day highs to the new low and trail behind the 61.8 of this move, right? That could be an option, right? Fib down 61.8 of the move, right? But you see that's in line. Look at this. A to B, where does the 61.8? Because this is where it's behind the 50 back of yesterday's range. Does that make sense? This is a super important point, guys. Okay, just let me know. I'm sorry, I want to labor this, but it's important, right? So look at this. I've got that moving average. It's in line with the tight trail, and the 61.8, which is the sell zone of the move from A to B, is in line with previous day mid. So instead of worrying to have to try to fib, if I just use that basic structure I've given you, right, it just makes things easier. So here I would trail from there now to either here or here, depending on how aggressive you want to be. But that's what I would be looking at. And the trade is still in play. And as I said yesterday, no need to stress it. Does that make sense, Mr. Deadlift? A lot of people chickened out from the trade yesterday, right? Simply because they don't follow a pattern, they don't follow process, they don't follow any kind of structure. Okay, Good stuff. So yen on point two. What's going on in crude? Again, as I said, I wouldn't be really interested in crude, and that takes us back to equities. Okay. Now, what have we been talking about on equities, right? We've been talking about the fact that anything can happen, but you can't expect, and I think we talked about it here. I can't remember if I talked about it here or in the weekly webinar, but I think it was here at the latter part of the webinar that even though we've had 1, 2, 3, 4, 5, 6 positive days in a row, the more you have that positive days in a row, the higher the chance that you're going to get some kind of reversal. And the velocity of move is likely going to be to the downside. So we prefer to keep on looking for the downside. We understand that we don't want to get aggressive, right? Fading it, but if it turns, the moment it turns, then you want to hit it, right? And that's what the velocity of move is. And you can see here that basically what it took 1, 2, 3, 4, 5, 6 days to ramp up, and it took about half a day to give back almost 50% of this ramp. That's what we mean when we talk about the velocity of move inside range, okay? Now, and you see that's the same on ES, that's the same on YM, on NASDAQ. It's the same move across the board, okay? So stuff happens. Now, this is particularly interesting, the way where this is trading and the location here. So I've had a couple of questions on managing some bigger trades because a lot of people were short or got short yesterday. And again, keep in mind it's OPEX, so you don't know what's going to happen. They could still jack these up, right? But you know, so far it's starting to okay, cool, Peter. So they start to roll. So I think a bunch of you guys are on NASDAQ daily, right? So here, what's happening? If you shorted NASDAQ on that, you see what's happening, by the way, negative daily close. And in the overnight session, the 10-day moving average caught it, right? You see how they're trying to hold the Momo, how they're trying to hold. So here, if you're short, what you want to see today is you want to see price close below the 10-day moving average, okay? 10-day moving average. Now, if you want to penny pinch your entries, if you want to be a little bit, more tactical, even if you had a negative close on the day yesterday, you would not have shorted the close. Does that make sense? You would have not shorted the close. Why? Because what are the chances on an OPEX week that we close on the lows and that we just crumble without having any kind of uptick the rest of the week? Does that make sense? So what you would look for is for a bounce into overnight, into the cash open, right? Into that 9:30, 10:30 window, and then you're shorting the overnight bounce, which you'd expect to see, or any kind of bounce, because your base case assumption is that this is the selling's coming in, the selling's been coming in pretty much every day into the close. That's it. This level is going to be protected. You wait to have any kind of rally and you sell any kind of rally with a stop either above yesterday's highs or above these highs, and you're looking for some kind of a top to be put in this week and then next week for it to completely crumble. Okay? What are the downside targets? Where here, the downside targets here, because that, a lot of the upside has been taken out, it's hard to bet on. See, if we were selling off of the 50% and we were staying below the 200 moving average, your base case assumption would be that we're going to new lows. Does that make sense? Now here, because we're still above here, you'd have to bet that this is a corrective move in an upward cycle or in chop, okay? So I would not have the downside fib to guide me at all here. What I would have is I would fib the move from lows to highs here, okay? And what I would say is that unless something happens, my target, I would expect buyers to come in, right? Especially as you get into the 50. So you would have first target zone on the break below the 10-day moving average. The first target zone would be the 100-day moving average. And then your final target zone would be into this 250 back. Because if this is back into an up trade, you would expect this zone to hold. Does that make sense? This is just looking at the NASDAQ. Okay. If this breaks and we get back below the 200, then it could be game on for a bigger swing, but that cannot be your base case assumption right here, right now. Okay, simply also because the NASDAQ is the strongest one out of these. Okay, now if you're looking at the ES, then it's a very different picture. Get hands up if it makes sense. Pino, it's a completely different picture on the ES, right? On the ES, we're still in this correction from highs to lows, right? The 61.8 zone is holding. We're still below the 200-day moving average, right? And we already have sells that are in play. And you see why this has a clearer path than because all this has to do is clear the 50. And what's happening? It's game on because you're back. You're below but the 200. Check. Is the 200? So number one, is the 100 DMA below the 200? Yes. Check. 2. Is the move back below the 50 back of the move from A to B? Here, yes. Check. 3. Are we back below the 50-day moving average? And that means that the 100 is below the 200 and the 50 is below. Check. Number 4. You see what I mean? There are a lot of things that could make you a lot more bearish than on the NASDAQ. Okay? In a similar fashion, YM, even better, right? YM, it's very little, it's going to take very little to be back below the 50-day. And then it's below the 50. Are the 3 moving averages, 1, 2, 3, in line for a bear trend? Yes. Is it still below the 50 back? Yes. Check, 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 check. You see what I mean? So here also, if you are flat and you're coming into today because you saw those closes and you're looking for a sell, right? It makes more sense to look to sell any kind of rally in the YM or try and sell a rally in the ES rather than sell a rally in the NQ. Does that make sense? It's an important point. There's an interesting dynamic here going on, right? So again, something that is interesting to focus on. Okay, does that make sense? Any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? Yeah, so you have to keep in mind, we've got Powell speaking here. So again, a lot of people are going to be focusing on whatever he's going to say, you know, especially with relation to negative interest rates, etc. So we'll have to be a little bit patient and see what we get there. But you know, it's going to be interesting if we continue to see the selling coming into the closes we've been seeing and accelerating. Normally, if Powell wasn't on deck, if you didn't have, if this wasn't an OPEX week, when you see the aggressive selling that you saw yesterday, any kind of your base case assumption coming into today is you would be begging to get an overnight bounce, and any kind of bounce you sell them hard expecting to see a retest of the overnight lows, right? It would just be close your eyes and sell them. You have to be a little bit cautious because of the context we're in. You have to be a little bit cautious because of the we've got Powell speaking and the wheeling and dealing of OPEX, but you know that's what you would you would look at. Okay, but again, they're different trades, and as we've been discussing this week, right? It really depends. So the locations are different on the different indices. So it also depends what kind of location you're looking for, what kind of risk reward you're looking for. Okay. But remember, we always expect the stronger one to stay stronger and the weaker one to stay weaker, because again, even in the midst of panic, if you got to put your money into the market, what are you going to buy? As we discussed in detail yesterday, you're going to buy FANG, right? You're going to buy Apple. So it's almost the new flight to safety. So, it could crack, but if Apple cracks, there are going to be a lot of companies that are going to have a lot more problems than Apple. Okay, so probably trade a lot weaker. Nat gas, what's going on nat gas? So here on nat gas, can't this go negative? I'm not an expert on the mechanics on nat gas. I assume because, and it's dangerous to assume because, crude went negative, why can't nat gas? I'm not familiar with the storage, if it's the same. I think nat gas is different because of the way it's moved around and it's stored, but I assume, sure, it's possible to have negative prices. I mean, on paper, any kind of negative pricing, you'd want to close your eyes and try and buy something. But the last thing I would want to do is try and be cute and buy futures or something like that. So as I said, is if we ever go negative or something, you will likely see that, whether it's the oil and gas ETF, so XOP, or as you saw was the case as we talked through it, as we were trading through crude and the panic in crude, right? You saw that the respective so XLE ETF was not getting smashed, right? Because it's a temporary issue. So I'd always use that kind of opportunity to try and get long either a basket of names or the ETF. I think the name ETF makes a lot more sense because it's the lazy trade, unless you have time to really walk through and look through a bunch of names. But I'd be very, very careful trying to play in the futures because you get some funky stuff, especially if we go negative. I think most people have now updated their models and their systems, but the last thing you want to do is be involved in those situations. So right now, I have no interest, as we've been discussing a lot. I think, I told you on that break higher here and fail, I'd be flattening out on those longs you took. Right, Neil, I'd really have no interest in getting long nat gas at all. I think there are so many more interesting opportunities across the board, right, than having to get involved in nat gas or crude here. Again, also, as we discussed, as everybody was panicking, it would almost be textbook or poetic justice that crude put in that the low is in. Now, as everybody's panicking that it's going to go negative again, we'll have to see if that materializes with nat gas, but I don't have a super strong opinion here. No, I'm not looking at any of the Powell comments because I'm talking through the charts with you guys, so I'll probably read up on them afterwards. But again, I don't know if you have a specific something specific in mind here on nat gas, but it's just not something that I'm too interested in, really. Again, all these stuff, when they break out, if they break out hard, there'll be plenty of time to get on them. I wouldn't necessarily be trying to pick the bottom or buying into weakness because you can really get carried out, right? You can really get carried out. So it's not something I would be too interested in doing, right? As we've been discussing, right, XLF is really staying weak, right? It stayed weak, and it's been a little bit of a tell for this action. And, it's very uncommon for the rally to really stick when you see a lot of these things like XLF, for example. We've been discussing staying so heavy. And now also something else we discussed, and I posted I can't remember if I posted it on the blog or Twitter, but something that's very interesting is the action on biotech, right? And you see how it's kind of stalling right in that multi-year kind of range. And this is going to be very interesting. But again, as I've been talking about this week, it looks like you're getting a lot of distribution across the board. It looks like you're getting a lot of unloading of some of the bigger names, and we'll have to say see if those things stick or not. But it's fairly interesting action across the board. Something which I mentioned in the Vimeo update earlier on today is look at the action on Apple, right? And we've discussed how essentially, and everybody's discussed it really in nauseating fashion, how Apple is the market, right? So something which is interesting, if you look at the action on Apple, right, everybody's waiting for that gap to fill on NASDAQ, right, into those highs. And we said, it doesn't have to roll, but as somebody asked yesterday, what would probably catch most people off guard? Well, probably a roll, because everybody's expecting that gap to fill, and it's free money week, and the gap has to fill, right? Well, look at what happened on Apple, right? Which has been the leader, right? Which has been what has been stealing the show, right? And look at that. Look at Apple, right? We go all the way into the gap zone, right? We rally up. So how many positive days in a row we got here? 1, 2, 3, 4, 5, 6, 7, 8, 9 positive days in a row. As everybody's getting excited with FOMO, trying to chase it higher. And look at it. It peaks its head right over the gap, and then there you go. There's the hammer, right? That's a little whack-a-mole, right? It pops its head over and then bam, down. So it's going to be very interesting what happens. But since Apple's the market, I don't think that normally gaps will fill, and that any upside gap, I really have no worry about them ultimately filling. But it might take ages for them to fill. But I think here the key thing is that is Apple, right? If Apple rolls from here, any small rally on Apple that doesn't get filled, I expect this whole, whatever it is, 10, 11 day ramp for the market to give this back extremely quickly. And at that point, it's only going to be about one thing, right? Is any dip in Apple going to hold, or is it not going to hold? And this is likely going to be the key, because if that can hold, then for the short term, forget that gap fill on NASDAQ and expect everything to trade heavy. Now, remember, as we've been discussing, this is falling in line with a lot of seasonal patterns we have been discussing, right? A lot of those seasonal patterns. And it would be normal. It would be normal to see us start to sell off here, and especially in line with the context and what we have been discussing. So it's important to keep those things in mind. It doesn't mean they have to play like that, but it's really important to keep those things in mind, right? As we said, we're coming out of basically that 12, 13% up in S&P in April, which was the best month since 1987, and it was the best April since 1938. Are you going to expect that kind of ramp, pop to be compounded until the end of the end of the year? You can't, right? You can't. Also, we just finished that best 6 months period of the year. So that means that now we know that the next 6 months, the likelihood it's far more likely to have a 3 to 5% down month, a heavier month, than it is in those good best 6 months of the year. So there are a lot of factors coming into play. Then we also said, keep an eye what's happening with the reopening. Keep an eye with Trump's rhetoric with China. Keep in mind what's happening in China. Keep in mind that the animosity and the fact that people are going to want China to pay. The market will not pay attention until it starts paying attention. Okay, so again, you can never bank on anything, because nothing is black or white. There's always a lot of different shades of gray, but there are an awful lot of things pointing to the fact that you do not want to be chasing market highs here. You don't want to be having any FOMO. If anything, you're focusing very closely to look for the next opportunity to trade a nice counter trend move back down. All in the context of the ES, right? Remember what we discussed, of course, in the context of the fact that we would not be surprised if the swing high for the year is in the context that we would not be surprised if the swing low for the year is in. But this is an awfully large range to play in, right? Whatever happens, we don't even have to break outside of this range for us to have an awful lot of trading opportunities. But we're stuck in a choppy area, right, after a very, very strong month, very strong rip, and everything would point, as we've been discussing, that this, since Netflix earnings, etc., this is probably the start of a move back down to the opposite side of this chop range, which is in the middle of the bigger range. So this is still in play, right? This is still in play. If we break above, bullish. If we break below, bearish. But at this level, we're still, the odds, the pot odds, the location favors shorts, not longs. Now, if we were going through at the end of the worst 6 months of the year, we're going through that pot, and we're trading at the lower end of this range, right? Our only focus would be on trying to get long, right? It's just you let the action dictate, the context dictate, the various the studying you have done dictate the kind of move you're looking for. You don't let bias dictate. Okay, so that's pretty much where we are. Okay, now, any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? Yeah, you have to be patient here, right? And again, you just have to be very, very patient here. Assuming we start to roll, which is likely to have a bigger percentage move down, whether it's, you mean YM, ES, or NQ? Again, I wouldn't look at it that way, right? Because to me, what that implies, or what that suggests, to me, that suggests that you're looking at, let's do it this way. To me, that suggests the following. To me, that suggests that you've identified the fact that we've had some kind of swing failure, okay? You're identified the fact that we're coming into the context makes it interesting to look for shorts, right? But number three, you're trying to make the most money or get the biggest bang for your buck. And that's why you're saying what's going to move more down, NQ, YM, or ES. Okay? Does that make sense? Now, I don't know if that's what you're thinking, but your question, that's what your question makes me think. Okay? And for me, that's over time. I would suggest that over the years, this kind of thinking is not going to be the thinking that will help you the most in your trading. Because here, what you're doing to a certain extent, you're focusing on trying to make the most simply by trying to forecast, extrapolate in the future, which is going to be the biggest move. Okay? Whereas instead of looking at it like that way, I would humbly suggest the following, right? Instead of looking at this way in trying to select the trade, is still assume that you've got some kind of swing failure. Assume that the context makes sense, right? What I would do is, number one, I would identify which is the nicest location. Okay, what is the nicest location for trade? Okay, number two, which one has the nicest risk reward relative to the potential move I could be looking at? Number three, right, which one is likely to encounter more or less trouble right down the line in terms of which is closer to resistance and further to support in a bigger picture, right? And based on that, right, you identify which is the best possible trade. Also, you can factor in what if something goes wrong in the thesis? What if something goes wrong in the narrative, right? What happens if we get some kind of headline that hits? Which one of these three is likely going to suffer the most, right? Based on all these things, right? Then you want to identify what is the best expression of your trade, right? Which is the best location, risk reward, etc. Once you found which one makes sense, then you size that opportunity, right, accordingly, right? Then you size it accordingly, right? But you can't let you don't want to just focus on which one could move the most, because they could all move together. You might get something that comes up and something doesn't play out, etc. And then you're already trying to assume, or you're trying to forecast who knows how much they could move, right? But what you do know is if you're looking for a move down, right, you do know which one is the furthest from big trouble point support, right? Or which is the closest one to some kind of resistance. Does one have a gap? Does one? Yeah, those are the things you have to focus on the best trade. Never let the money guide you, right? It's don't let the money guide you. What is the best trade? That's really, and that is determined by location, risk reward, context, etc., not necessarily which one could move more, right? You might have one that might move more, but it has a far lower chance of moving more. You see what I mean? So it really depends what you're looking for. Yeah, well, I mean, it's also right. Well, we'll look at it that way. Look at the charts basically. So, which has the nicest location, right? Which has the nicest location? So let's assume, okay, let's assume that, what are we going to assume? Okay, let's assume that we're going to retest those lows, okay? So first of all, of course, but let's just do it this way. Again, the size of the contracts is not the same, so it's also not, but you've got about 20%, 23% of those lows on the ES. You've got 27% to those lows on the YM, and on the NQ, and you've got about 23% to those lows. So 23% on to those lows on YM, 23 on ES, and 27% on the NASDAQ, okay? So setting aside the fact that the contract size is not the same, so selling 111 is not exactly the same, right, in terms, right? So let's assume you would notionally weight it to make sure that it's the same. You see how you're penny pinching? Because what's the real difference between 23, 22, or 21? Does that make sense? At least my way of looking at it. Who cares, right? But what I do see is that assuming we're going to test those lows, right? The NASDAQ, you have to get through the 10-day, you have to get through the 100, you have to get through the 200, you have to get through the 50, you have to get through the 50 back, you have to get through the 61.8, you have to get through the 78.6, which is going to be the case on all of those, right? But more importantly is this one, you have to get through it's above all the moving averages, right? You have to get through a lot of support, right? And this big top that was previous resistance is now going to be support, right? Now, when you're looking at the YM, What's the difference on the YM? Well, really, it's a very different picture. You see how if you get through that 50 or this, you've got pretty much a clear road for most of the ride. ES, what happens on the ES? Well, on the ES, it's also different, but it's a lot more choppy, right? If you get through, you've got more of a clear road, but you have to get through the ascending trend line. It's still in this choppy area. It's very, very different. Whereas if you're looking at the RTY, which is not looking through, the RTY, this is even more beautiful, right? Because what is the RTY, right? Sitting here, you've got about same kind of action. What's the difference on the RTY? RTY, once you get you're already below the 10-day, right? You're already below the 10-day moving average. Once you get through the 50, it's a clear run. And by the way, look at that old low. You're home free. So assuming markets are going to retest the lows, which is a big assumption, right? To me, if somebody told me, okay, it's markets are going to retest those lows, I don't know how long they're going to take. I don't know which one's going to get there first. Which one do you want to be short, or which one would you be more comfortable holding based on the structure, the location of these? It's the Russell. It's the Russell. It's been the weakness, structure, location, context. It's been the weakest, except, does that make sense? So again, sorry to labor the point, but I think it was a good question, and it's an interesting discussion, right? Then obviously these things can change, and I haven't thought about it because I'm just going through it here. It's not like I prepared or anything, but you see how I'm thinking through it? Does that make sense? Is that helpful? Okay. Any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? No, I mean, as I've said, I don't pay that much attention to commitment of traders, option expiry levels, all those kind of things. I mean, they can make sense at times, but usually, right, as we discussed yesterday, especially with positioning or sentiment, pretty much what positioning or sentiment is going to be like. And then it's kind of like, people that look at also all those people that try and sell you unusual option activity, all that kind of stuff. I bet there are a lot of people making money selling you special analysis and reports on special option activity, on reading the COT, special ways of looking at that. But really, it doesn't have to mean anything, right? You don't know. Things can stay irrational longer than you can stay solvent. And as always, you're only seeing one side of the trade with a lot of those discussions, right? Whether it's unusual optional activity, whether it's COT, whether it's option expiry levels. Okay, you may know what level is of interest, but you don't know what kind of it is. You don't know what people are doing. You don't know if people are hedging out. You don't know what the other side of the trade is, right? So anyways, it's a complex discussion, but no, I wouldn't spend any money on those. Yeah, also again, based on the discussion earlier, of course, then it also depends, different notional values, different margin requirements, et cetera, depending on what you have on, it's not always. Yeah, here you're just, silver, you're getting silver is just clearing all the weak hands, right? As we said, it's likely just retail active inside here, right? Just weak hands getting taken out. very, very bipartisan, very democratic, right? Doesn't matter what race, color, religion you're in, we're going to take your stop. Upside clear, downside clear. There's probably more downside to clear if they really wanted to get rid of all the riffraff, but it's just chop. So again, what are you going to infer based on what's going on here? Nothing. It's just a lot of small traders getting whipped around, getting smacked around, especially small retail that decided to play God forbid they're in the futures contract, they're getting massacred here. But there's just nothing to say. All these things, everything that's happening, as we said, on balance, should be positive for metals, right? Should be positive for bonds. Inside, shorter term, you could get a lot of whippy action and short-term action, and especially here, I don't know if Powell's still speaking, right? But you're just going to get a lot of chops. So the best thing is just to sit on your hands until he's finished speaking. I mean, here we're really at an inflection point where the focus is on the bigger picture and on the bigger rotations, on the bigger opportunities. Short term, anything can happen. Then also keep in mind that we're still in OPEX week, so you're going to see a lot of shenanigans going on. So really, you want to be careful. Yeah, here basically, I think what you would want to, the big question, and it's the same question across the board. Also, if you're looking at the DXY, right, we're just stuck around that 100. Nothing much is going on, right? We're still stuck here. Are we going to see a big break one side or the other? We'll have to see. I think there's plenty of smart people making very, very good cases for this, both to break up or to break down. There are even people talking about first it's going to break down, then it's going to break up, or first it's going to break up, then it's going to break down, trying to, it's already hard enough to decide or to make an assumption whether something is going to go up or down. If you're going to try and attach a specific timing to that, or specific path and timing, that's really making it harder than it should be. I'd always much rather look at the, if this happens, then that happens. But globally, that 100 is still being defended. I still think that if you don't want to bet against the central banks, right? If you don't want to be that guy that got smashed shorting the JGBs and betting against the BOJ, if you don't want to be that guy that did that and then didn't learn and kept on trying to short bunds betting against the ECB, right? If you want to be that guy now shorting bonds betting against the Fed, it's up to you. But also, with what the Fed has said and what the Fed has done, and keep in mind, what we were discussing it, that strong dollar just really breaks everything. So nobody wants a strong dollar. I mean, could it happen? Sure. But is any spike going to be likely a nice selling opportunity? Most probably, right? So here, I haven't changed my mind or our outlook here. Is just a lot of chop inside this. But if I have to bet, as we said right here on these current moves, our base case is still that we're, these highs, that then we're going to slowly drift back into the 98, and then we're going to see a lot of chops still inside this 196. Then, and maybe that's what we're going to get. Maybe we're going to get that chop inside this 100 to the 96 in the same way that ES is going to hold those year highs and lows so far, and we'll stay chopping around there at least until election. And then if something is going to free up, it's going to be after the election. Who knows? But right now, there's very little that you can read into the action so far, unless you have some kind of a macro view or fundamental view that's driving you. In terms of the technicals, just not a lot is really going on, right? Yes, I'm still, as I said, those longs, euro, shout out to Marty again, that long euro GPB is a nice trade. The long euro JPY, as we said from last week, was the nicest hold over the weekend. Even though you have to trail it tight because that could turn at any minute, so it was a nice trade. I'm still short, got back short that USD JPY. I still think this is a very nice trade with very, very nice risk reward. And our base case assumption is still that the 104.50, that range is going to get tested. To answer your question, we've discussed this about more than once, is I don't think the BOJ gets any kind of they're not going to get worried or start panicking unless we're back approaching the 100, right? Below the 100, you'll likely see them active. Around the 100, you'll likely see the BOJ, maybe some kind of verbal intervention, but I don't think it's unless you get, so there's a lot of room to go before they start getting worried again, right? But our base case is still that it's still that it's trying to come back down into those lows. The amount of money you helped me make by not losing, that's good. Did Nat Gas just take another puke or something? Yeah, there you go. Smashed again. You'd be surprised how many people that are not even subscribed keep on emailing me. Is it time to get long Nat Gas? I always email back. Is they call it the Widowmaker for a reason, but it's just. And again, if you're a retail trader just trying to figure things out, the last thing you want to do is really try to take aggressive plays or fight trends in commodities, because those are the nicest trending markets and they can really get stupid. Forget the different pit times, et cetera, but it's the best way to go bust. But here again, no real change in the yen. Still short the yen. Very, very happy with the position and still holding it. Again, all things being equal, you have to expect that you're going to retest the overnight lows in equities, right? As we said, oh, there you go, they're moving. If you weren't in OPEX, if you didn't get Trump on the wires, etc., you would have gone home last night, or you wouldn't even gone home. You'd stay up to sell any kind of bounce in the overnight session for a retest of those lows. That's just a textbook play, right? So here, what's going to be interesting is what happens, not only what happens again at those lows, but also respective of what happens today, if we see that late day selling coming back in, right? If we see that late day selling coming back in, that's really something you have to focus on. And we've discussed this in the past, and we've looked at this a lot, right? And we said you have to pay attention to what's going on, right? We saw that after you got the gap down on the ramp, you saw that selling coming in at the end of the day, selling coming in at the end of the day, selling coming in at the end of the day, selling coming in at the end of the day, right? So it's not the sign of a very, very strong market. And especially when it's just led by essentially the Apple buyback desk and NASDAQ going cocaine angel all the time, it's tough to short, right? Because you can't sell into strength because you're going to get taken out, right? That's why we said don't touch the NASDAQ, but you want to build shorts or get shorts on the other ones that are not falling, or get ready to short, because those ramps, when you start to see, no matter what you're looking at, when you start to get like a 10-day, 5-day, whatever, 7-day ramps, when we never take out the previous day low, we never even test the previous day low, and the market is going in one direction, especially with those overnight ramps, it's just, if you've done your homework, that the market usually gives back these moves in a fraction of the time. So if it takes 5-6 days to ramp up, it'll give it back in a day. If it takes 5 to 6 weeks to ramp up something big, will take a couple of weeks to give it all back, or at least the 50 back will come very, very quickly. Now here, coming into the day, is what you want to watch is, especially going into the 10, 11 a.m. window, if they can't smack these down, right? If they can't hold these below, if we can't take out those overnight lows, then they might have saved it, right? Then it might be time to try and pay some tactical longs for those of you who are playing intraday, smaller tactical longs to see the market try and take out the overnight highs, right? And then maybe we have to wait, and then maybe you get that ramp, these hold, and you get that little bit of the ramp. We take out these highs closer to the close, and then you get the selling coming back in towards the back end of the day, right? That could also be a very nice scenario. But as everything is pointing out, it looks like everything's getting heavier this week, and it's building to stronger sells, more sell flows coming in towards the end of the day. And if anything, you'd expect it to give it up next week. Can it give it up this week? Sure, 100%. But if you look at the stats, if you look at the odds, if you look at how market tends to happen, it's unlikely to completely lose it on OPEX week. It can, it has happened before, but if you bet on it on 1,000 times, the same bet size over 1,000 occurrences, you probably lose money betting that way. Okay, so yeah, exactly. That's the way I would. I would look at it. So you have to be careful. And you'll see it's fairly. You'll see it, right? Even if you go back on a shorter time frame, it could be a 5 minute, it could be a 15 minute, it could be the 1 minute. You'll start to see what happens is you'll start to see them squeeze higher. And what will happen is, like, look at this 1 minute. You see it just, the previous candle high gets bought. It closes on the high, first dip gets bought. Yeah, if you start to see 3, 4, 5 in a row starting to trade that way, it is very high chance that the market is done trying to look for weak players to the downside. It's going to try and clip the upside, try and come all the way back up and take out weak players to the upside, right? It's fairly classical move, and you'll see it. It's fairly evident. It's just, you'll see no downtick at all, right? Just bam, puts in a low here, and as we go through the next turn of the hour, that 10 a.m. window, they're just buying. There's no downtick at all. It just keeps on going higher, higher, higher. At that point, you want to either join the dark side, either you want to trade longs, scalp tactical longs all the way until we get close towards the close, and then you look for potential selling to come in. But you don't want to, even on these kind of days, especially on OPEX, but on these kind of days, you usually don't want to fight flows, right? Either you take a position at an extreme, or but you don't want to fight flows. Once it gets going, it could really extend in one direction. It could be a grind higher, grind lower day, so you don't want to get too stubborn that way, okay? Awesome. So let's see what we get for the rest of the day. Things are shaping up. We really can't complain. Things have been very interesting. Let's see what happens. It's going to be an interesting end of the week, guys. I need to dash. Have a great one. Talk to you guys soon. Thanks for flying with 50, and we'll do this all again tomorrow, okay? All the best, guys. Talk to you guys soon. Take care. Bye-bye. All the best.